You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, NASDAQ proudly launched the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the NASDAQ 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched NASDAQ 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on NASDAQ's full suite of index options products at www.nasdaq-100-options-XND-NQX-NDX-VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now it's time for a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together, shall we? Because it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you folks are mainlining these days, as January was our 16th anniversary, of course, coming off the heels of just an insane record year across the board here on the network. So thanks to all of you who continue to drive up my bandwidth bills. We do appreciate it. And of course, if you do like what you hear, do keep rating and reviewing it. The show's literally available on just about every platform under the sun. You can even tell your smart speaker to play it for you now. So if you do like what you hear, do keep rating and reviewing on your platform. It clearly does have an impact. It clearly does help new people continue to discover the shows. And speaking of discovering content, if you want to discover more content, let's say later today, let's say you don't want your broadcast week to end with Volatility Views, you want some exclusive shows like Options Oddities, great pro Q&As. We just had 2 more this week. We gave you a double pro Q&A week because we like you folks out there. Of course, live access to this and everything else we do. We also just gave away our January Pro Trading Crate. Congratulations to one of our new members, Pete05 there. He took that home yesterday on the option block. So a lot of fun going on. If you want to see what all that fun is all about, theoptionsinsider.com/pro is the place to go to learn more. As we go around the horn, see who's joining us on the old Volatility Views program today. First, back out to the Southern Volatility Mecca. Not quite as warm. these days, but I think it's a little warmer than it is here. Of course, we're talking about Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. How go things in the polar vortex of Texas?
We had the big freeze. Everyone was freaking out, but now we're in the clear, and I think it's going to be in the 70s again here shortly. So excited for that. Almost as excited as the overall market.
Yes, a little bit balmier than I think the -4 we got going on over here. I'm sure you miss those days, sir.
Oh, of course. I miss nothing. I miss more than below zero temperatures.
What are you doing with all your winter wear now? It's just going to waste. See, you know.
I burned it.
Big bonfire out in the yard once you move to Texas. I get it. And then also joining us, I think he's beaming in from the hinterlands of Chicago here. Our old friend, Mr. Scott Nations, the president of Nation Indexes, and also the creator of a little product we like to talk about around here called VOLQ. Mr. Scott, welcome back to Volatility Views, sir. It has been too long.
Thank you so much. And you're right. I am, not quite the hinterlands of Chicago, but Chicago.
Oh, well, there you go. So you're enjoying the balmy, whatever we are, -4 today as well. So all sorts of fun.
Not quite enjoying, but what are you going to do?
Yes, what are you going to do exactly? You know what a good solution to such horrible cold is to stay inside and talk about some volatility. So let's get to it. Time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from about trading and trending and analysis and unusual activity. All sorts of fun perspectives. We got a lot lighting up the market this week. I want to get to all that in a second, but really quickly, Scott, it's been quite a while since you've joined us here on Volatility Views, and of course, this is your first appearance for this year. So we're kind of taking a nice survey of all of our guests when they come on Vol Views for the first time this year. Looking back a little bit, when you look back at the mad, the topsy-turvy, the tumultuous, pick your adjective, they all kind of apply. The year that was last year. It could be from a variety of perspectives, from an overall market, from a volatility, from an options, or whatever perspective floats your boat. When you look back at the year in the markets in 2022, Scott, what really stands out? What were your takeaways from last year?
That would be a couple of things. One, the general direction of the market. Let's face it, market could have done a lot worse. And turned around right at the beginning of the year. So the S&P is up about 8% just this year so far. The second thing would be zero data expiration options. So we're talking about volatility. Let's talk about options specifically. And the growth in very, very short dated options. I think everybody has to be paying attention to that. Right now, it still seems like it's largely an institutional game. And I shouldn't use the word game. It's not. We're not playing here. But it still seems to be. They seem to be largely the tools that are being used by institutional traders, not so much retail. But the volumes have just been crazy, and I think it's just a matter of time before we see that get into the retail space.
Yes, certainly two undeniable trends from last year. In fact, I think we'll come back to the zero DTE a little bit later in the show today. It is an inescapable phenomenon these days. Let's get on out to the phenomenon that is the markets right now, listeners. And man, what a week we've had in store for us this week. We were talking on the show last week. We were a little bit surprised. It was myself, I believe, the Rock Lobster, and Dave Lincoln from the Short Vol Show. We were all a little bit surprised last week at how quickly they were coming for the vol heading into the weekend. We still obviously had a Fed meeting ahead of us. It seemed a little strange how aggressively they were rallying the market and how just completely willing they were to crush vol back down to substantial levels, threatening that 18 handle again. Again, going into a weekend right before a Fed announcement. It just seemed strange. It seemed like they were kind of whistling past the graveyard a little bit. Of course, this week, we did have the Fed, everyone waiting on pins and needles for what would Powell say. And of course, it comes out, and he's not terribly dovish, really, at the end of the day. And yet the market just took the crumbs, the scraps that he gave them, and they turned it into a feast, and they ran with it. They drove this thing up and up and up. Just we are back well north of 4,000, obviously level 4,100 now on the S&P. And then coming into today, of course, we had just a rash of, I think you can charitably put it, terrible earnings last night. I think with the exception of Ford. Ford was all right. But the big tech, Apple, Amazon, Alphabet, the big A's, all really screwing the pooch last night. And just for a while there, I think Apple might still be up. But they played that shell game pretty nicely where, the old bait and switch. Look at Meta this week. Pay no attention to our numbers. Here's 40 billion worth of stock that we're buying. So there's a lot of different ways you can play that shell game around earnings, listeners. And the companies have gotten pretty good at it, but not enough to keep the market up today. Finally, the weight of that, of course, we had some more numbers coming out this morning. The economy perhaps a little bit more robust than maybe even the Fed was thinking earlier this week. That's usually good news, but not when you're worried about the Fed dialing up the rate increases again. So that's spooking some folks, on top of the fact that kind of the big three on the tech side just really falling out of bed from just a results perspective. I think Apple, the worst year in 6 years. Amazon, their worst holiday quarters in something like 2014, so closing in on 10 years. So not at all good numbers by any stretch. All of that conspiring. We were still mixed right before showtime, listeners. But now, as the show is kicking off here a little bit, we are finally all fully to the red. S&P off, not quite 1%, about 0.8%. Dow closing in on 0.5%. Dow the laggard, some names like Ford and others. We're managing to keep it a little bit aloft out there. NASDAQ threatening a full percent now to the dark side. That means our vol friends are up slightly from where they were this time last week, though. So you'd be forgiven if you looked at this and you thought, oh, not much has really happened over the course of the last week from a vol perspective, even though we've done a lot of living since our last show, listeners. VIX cash 1830 right now, up about 0.3 of a point. VVIX itself, so the vol up about 3 points. And VOLQ, a.k.a. the at-the-money vol of the NASDAQ 100 at about a 2360 when we kicked off the show. Since we're talking VOLQ, Scott, we'll start in your neck of the woods out there. Obviously a crazy week. What are your thoughts on what we saw from the Fed, the market's reaction, and the resulting craziness we've seen in volatility, sir?
First of all, I love the way you start the show with all VOLQ all the time. I love that and appreciate it. I think that everybody was a little flummoxed by the market's response to what the Federal Reserve and Jay Powell had to say. And if you weren't surprised, then I think you're probably not paying attention. So there's that. Today, let's look at what's going on. And it's interesting. The market's really turned around, really gotten active in just the last 20 minutes.
Yeah.
But, that huge unemployment number. Now, don't at me about, participation, but that, huge, much better than expected number. And so in fixed income, we're seeing about what you would expect in that situation. The 10-year yield's up 12 basis points right now. But it took 20 minutes. It was only 20 minutes ago where the market, where the equity market really decided to sell off. And it's now 30 points below where it was 20 minutes ago, which is unusual. I will say this, in the volatility space, something really interesting is going on right now. So VOLI, VOLI, which is purely at the money implied volatility in the S&P space, is up 3.3% on the day. And, that's probably about what you would expect when the S&P is off nearly 1%. But the VIX right now is unchanged, precisely unchanged. And, that doesn't make any sense that at the money would be up so much and the entire swath would be unchanged, literally unchanged. And so that's why we say you have to deconstruct skew to understand what's really going on. So at the money in the S&P is higher. Reasonably out of the money options, call decks and put decks, are a little bit higher, but deep out of the money puts. So tail decks, that ticker symbol TDEX, is getting crushed right now. It's down almost 12%. And so while the VIX is unchanged, that's only because deep out of the money puts are getting sold like nobody's business. So that's why we say you have to deconstruct skew. You have to do that in order to understand what's really going on. And I think it's fascinating.
Gotta love those out of the money options and their impact on VIX. A controversial topic, to say the least, out there. Mr. Meatball, you're not afraid of controversy out there. Obviously, a crazy topsy-turvy week. Like Scott was just saying, the Fed, not really laying down an overly dovish track, yet the market certainly took the bit in his teeth and ran with it like they were. And now, of course, we have last night and these numbers that were terrible. The market tried to shrug those off. And then, of course, we had the number this morning on top of it. So it's been kind of a triple whammy this week. What resonates to you as you look back and you saw the market's response to Powell this week? And then, of course, the madness that has unfolded ever since, sir.
I mean, the Powell stuff was just absolutely unbelievable. The way markets just ripped and then dipped and then re-ripped again. It was really something to behold. I think the moment that we traded up was when he said, yeah, you know what? Handling inflation without killing jobs is reward. It makes me feel good. And then the markets just took off. It was something unbelievable. And then today, how can you look over Apple's earnings from yesterday and say the stock should be up $4? They had a giant.
They're popping this thing on this terrible numbers.
We have a giant revenue decline, and they're expanding the PE. The Federal Reserve executed $33 billion in quantitative tightening this week. They're putting the screws on. We saw since yesterday, both VIX futures and VOLQ futures just essentially move straight up with the market. At the highs of the day today, when we were borderline unchanged, VIX futures and VOLQ futures had just gone straight up. They tried just pulled in the last 20 minutes, as Scott said, 25 minutes. They pulled the rug right out from under everyone that was excited and really took the market down. Now the question is, what's the next leg here? We're basically sitting where we got kind of after the silliness of the open. We're kind of sitting where we were at, 9:45 Eastern. What's next? I think that's the big question on everybody's mind. But this is this kind of the last 20 minutes has been something to behold. They really came in and dumped it.
Yeah, even with all this sell-off, we're still not even back below where we started yesterday, right? So, I mean, we're still up over the last 24 hours. So, crazy. And you're right, the Apple thing, I mean, you can read a lot into single names. They get crazy. But Apple is exactly $30 north of its 52-week low that is set not too long ago out there, listeners. And they're rallying it again today at nearly 3%. Be interesting to see if they can turn Apple negative by the end of the day, because you're right, it's hard to read a lot of positivity into those numbers outside of being just a complete Apple diehard. Sometimes the emperor does have no clothes, and I don't know. That one is a little surprised. That just goes back to my old saw. The market doesn't like it when Apple is red, so they just conspire to turn it green as much as possible. Let's see what's going on. Let's see what conspiring is going on out there in the land of the vol surface, shall we? Scott, we'll start in your neck of the woods, because I know you guys have the VOLQ futures out there right now. Anything intriguing, anything catching your eye out there in the VOLQ futures term structure this week, sir?
Yeah, that's a great question. And a couple of things. We consistently have been setting records for VOLQ futures open interest. I think we've had 13 different all-time highs for open interest over the last 15 trading days. And we've seen volume not only in February, but also in March and April. We've seen March and April contracts, which are really interesting. It's the front month in February is higher than everything else, but that's not really that unusual given that the market down, NASDAQ 100 is down 133, 134 points this morning. So that's really interesting. Good to see so much volume. The other thing I would say is that in the at the money versus full strip VIX methodology in the S&P space, we're finally starting to see some skew come back into the market. And we ended last year with skew at just ridiculously low levels. Nobody was afraid of anything. And so we keep track of that ratio. So VIX divided by VOLI, VOLI. And it spent much of the end of last year in its lowest decile historically. And now it's right about in the middle of the pack, 1.12 right now. And that's kind of that may end up being the best measure of skew. because it's going to take into account essentially every option in the strip. So I think that's interesting. I think it's really interesting that skews come back into the market. TERMDEX has recovered. Again, that's the cost of a 30-day 3 standard deviation out of the money put. And that's also come back. I mean, end of last year, that got really, really, really low. It got well into single digits, which is kind of crazy. So even when the market was selling off last year, nobody was that afraid. And I think that what they were saying was, yeah, the market may be down, but I'm not going to sell here. So I don't really care to own puts. And in fact, I'm going to put a bunch of more money in the market if I get the chance at lower levels, which is generally pretty healthy. So complete lack of fear is not a good thing. But, people saying if prices drop, I'm going to buy more stock is probably a good thing, at least if you're an investor.
Yeah, you're right about the lack of fear. It certainly appears to be none of that. We were talking about that on the show last week. They were completely unafraid of crushing vol. They had no worries even going into a Fed week. Now this week, maybe we're finally starting to see a little bit of that vol firm up a little bit again. In fact, let's go out to the land of the VIX futures. See what we're seeing right now. We just re-racked them as we were talking here because obviously things firming up a little bit out there right now since the start of the show. And that front portion of that VIX futures curve, as you might expect, listeners, starting to get a little bit frothier again, coming into right now, actually, the Fed future up almost a full point, about 0.8 of a point from where it was, this time last week. The March future following suit up about 0.7 of a point. Looking farther out, though, we still have, beyond this little bit of inflection by the front portion of the curve, we still have a pretty traditional contango for the most part. Don't see any weird aberrant spikes. Remember, for a while there, listeners, they were pricing in some sort of strange vol spike around the July timeframe. That seems to have been smoothed out now. We pretty much gently drift up all the way out to the end of the slope there. Mr. Meatball, anything catching your eye out there in the VIX futures, which are starting to look a little bit frothier right now, sir?
Yeah, there was we've been going straight up since yesterday morning, and they continue to buy VIX futures, even with the VIX down on the day. Vol futures were up. They never acted like they were buying into any of this business. And the way vol is acting, we could have just topped out, and we could see a pretty dramatic last couple hours here.
I would expect nothing less than them completely upending the market during our show, Mr. Meep. We have much precedent for that. So we are prepared for whatever the market wants to throw at us here. Speaking of futures and things the market is throwing at us, we have the numbers now in our hands from OCC announcing their official numbers for January. Of course, January, a pretty firm month, 923 million contracts, the third busiest month in the history of the options market. So a pretty good start to the year from a volume perspective. But I want to narrow down on one particular element, listeners, because that's intriguing to me. And all these bright spots and all these strength that we saw, index options volume across the board just exploding. I wonder why. We saw ETF options up. So a lot of just bright marks there on the report. The one dark mark, and it was actually pretty dark, was the futures volume, which we know OCC mostly clears VIX futures. So that number mostly reflects VIX futures volume, down 36.5% in January of this year from January of 2022. That's been kind of a frequent refrain ever since the onset of the pandemic. People thought, well, maybe people would start turning to volatility. We saw vol getting frothy. The vol futures never really kind of followed suit. And they've been waiting. They thought maybe last year, the launch of and the return really of inverse vol with SVIX, that would be the thing that was going to gin up these numbers. And yet here we are kicking off the year, the third busiest month in the history of the business. And vol futures numbers down 36.5%. Scott, I'm curious. You have some skin, obviously, in the vol futures game. Were you surprised to see those overall vol futures numbers for January so low?
Well, for VIX futures, not really. I mean, I'm on record as saying I'm not a big fan of the way the VIX is calculated. I understand why it's calculated that way, but today is a perfect example. The VIX is being driven today by these ridiculously out of the money, incredibly low delta puts. And those things aren't a hedge for anything. No, but those aren't a real tool for anything. And so if your volatility index is going to be driven by 5 delta options, then I don't think much of your volatility index. So, and we've seen, VOLQ has seen, as I said, good volume and great open interest. I will also say one or two other things. And I'm going to take a step back. I just posted on my Twitter account, Scott Nations, one of our representations, a graph that shows term structure for NDX and SPY options from 7 days out to 360 days. And I post that every once in a while. You can see that again on my Twitter feed at Scott Nations. Last thing I'm going to say about VIX futures volume is people spent much of last year saying the VIX was broken because it wouldn't rally very much when the market sold off a bunch. And the reason it didn't rally a bunch, the VIX didn't rally a bunch, is that given what it really measures. And so if the VIX is at 30, then that expects the market to be pretty volatile. And if the market ends up being pretty volatile, then VIX was right. And you wouldn't necessarily expect it to go even higher just because it's correctly predicted what volatility is going to be. And so I think some of what was happening in the VIX space is people didn't quite really understand what VIX is supposed to measure. And so they thought the VIX was broken. We can argue whether or not VIX is broken. It wasn't broken last year because of the way it was responding to moves. I think it's broken for other reasons.
People wanted that VIX back to 80, Scott. They would accept nothing less last year. Mr. Meatball, same question for you. Are you kind of surprised that we saw such light volume in VIX futures with everything else going on in the market, with the markets rocking, with SVIX back? I mean, not really doing a lot of paper, but inverse vol is back. All the catalysts that we are supposed to need to drive some vol paper were there, yet the paper not so much, sir.
Well, who needs VIX when you've got same day options would be my response.
That is a response,
today,
yes.
If you want to hedge for today, just go out and buy a put that expires in a couple hours. And I think the other piece, and I think Scott made a pretty salient point, was that, and I've said this a couple times, the scariest part of a horror movie is not the actual axe murdering. It is the jump scare before the axe murderer kills everybody in the house, right? And so last year was just an axe murdering, and we, in a ugly but orderly fashion, just kind of dropped. And we didn't get the huge days that you would need to have like a true fear. It was a bunch of known problems that were causing the market to go down. There wasn't any uncertainty. So there was no reason for the VIX to get to 40. The VIX in the last...
Did we lose you, Mark? Like the deep...
I think we lost.
Yeah, the deep freeze struck him mid-statement, Scott. Go ahead.
Which is unfortunate because I think he was on exactly the right track. If the market is volatile, such as the VIX should be 30 or 40, and the VIX is at 30 or 40, again, I don't know how you can be upset that it won't go higher just because a day is kind of ugly. I mean, it's supposed to measure something. I may not like what the thermometer is telling me right now, but that doesn't mean the thermometer is broken.
Yeah, I think he has a point, too. We have debated this for a while. The unintended consequences of this zero DTE explosion. We still don't really fully understand them all, I don't think. And I think the point of people are maybe starting to replace some of their other exposure with, it just literally has to be. There's so much volume going up in these zero days now, Scott, that has to be cannibalizing something else. And maybe some of that is VIX futures at the end of the day.
Yeah, it absolutely could be. I mean, if you're focused on 0 day to expiration options and you're not focused on something else, maybe, and we obviously have a really neat relationship with NASDAQ, so I don't want to be patting them on the back just to pat them on the back, but maybe the way to play this is the options exchanges.
There you go. Volume play. Mr. Meatball, do we have you back, sir? We lost you there for a second.
Yeah, sorry. I didn't mean to mute myself. And Scott, I think you can speak to this. The three of us understand the concept of, VIX is really 30 individual periods, right? That kind of weight, and VOLQ is the same way, right? 30 individual periods across a set of options that create that index. When zero DTE is taking up so much volume, right? Mark, what percentage of today's options are in SPX are going to be 0 DTE.
It's usually half on any given day at this point. Let me pull it up right now. We'll see. Let's look at the top 20 most active contracts in SPX. And guess what? All 20 are expiring today.
There's little to no vega in those options. And they're so short dated that they really kind of swallow up a lot of the exposure that VIX and even VOLQ would have looked at for, responding to these big moves. And and the fact that they don't have a lot of vega exposure is going to cause a little bit of a muting effect on these 30-day indexes. If you want to get and Scott, I don't know if you have this. Do you have a short term, like a 1 week VOLQ or a 1 week or like a short dated vol index for NASDAQ that you've built?
We do. We calculate, and you can see from the chart I posted, the graphic I just posted on Twitter, we calculate our VOLDEX methodology, which is more precisely at the money implied volatility. On SPX, we calculate that for a number of expiries, number of tenors from as short as 7 days to as long as 360 days. And actually, I'll post some of that on right now. So we do calculate in NDX a lot of stuff with a 7-day tenor, and most of it is getting crushed right now. So I don't post that right now. But you're right. I think everybody's focused on super short dated options, and in fact, in the S&P space and SPY, we just started calculating 1 day VOLDEX.
Oh wow!
Yeah. We're just now able to do it because we just now have the expirations that will allow you to do that. But you're absolutely right. People are focused on the shortest dated stuff, and to the exclusion of what's probably healthy for them.
Yeah.
Well, talking about that focus on 0 day, while you were talking, Mark, I just did a little more digging. And we always joke about the top 20 usually being completely 0 day. Usually in the top 40, you can find at least 4 or 5 names total that are not expiring today. Today is the first time I've ever seen this. All 40 of the top 40 most active contracts are all expiring today. In fact, Henry and the team over there at Trade Alert, they had to build us a special scan just to find the non-zero DTE contracts going up in SPX. So I just ran that. And the most active non-zero DTE, which is obviously well outside the top 40 even, most active today, are 8,000 of the February 4,100 puts expiring on the 6th. And that's pretty much it. So this product has been transformed, listeners. And like I said, I still don't think we fully understand all the ramifications of that going forward. But Scott, you mentioned you have the expirations now to be able to calculate some of those nearer dated VOLQ. That's, of course, because you have the VOLQ options. We've got a new addition here to the vol space. Finally, you and I have been talking forever. We had the VOLQ futures for a while. Now we can finally sink our teeth into VOLQ options. Catch our listeners up if they missed it. When did these launch and how are things going here in the early days?
Thank you so much. VOLQ options listed, I think, third quarter of last year. And we've seen some really interesting volume, some really interesting open interest. And they're just a great way. Well, let me put it this way. If your portfolio is looking more and more like the NASDAQ 100, then shouldn't your hedge look a little bit more like the NASDAQ 100? And so we've seen people starting to take some positions, hedging or speculating. It's great to see in VOLQ options. The whole franchise is doing really well. The open interest again in some of the back months for the futures is also really good. So we're really excited. I mean, open interest in the March contract for the futures is now 635 contracts, which is pretty good for a brand new volatility futures in the back.
There you go. You mentioned you're starting to get some OI out there. By the way, I mentioned at the top of the show, listeners, we had VOLQ at about a 2360. Let's do a quick top 5 here before we roll on into some of the other products out here. We got some paper now, so we can do a top 5 out here in VOLQ, which is always nice to do. Looks like number 5 and 4, we got a March 24-25 put spread. Number 3, the March 22 calls. And then number 2, we've got the Feb 30 puts, and number 1, the Feb 25 puts. So all very reasonable strikes. I'm used to, Scott, all this weird, outlandish par calls and stuff. So not seeing that yet in VOLQ, but I'm sure over time that type of paper will start. Speaking of paper, we're starting to see that, and maybe exploding is a better term out there in VIX options today, listeners, because we're putting up some numbers. That ADV starting to reflect the froth of Fed week, listeners. That ADV back up over 600,000, 602 to be precise. That's up 81,000 contracts from this time last week. So that shows you how active Fed week has been. Today, no slouch, 613,000 contracts on the tape already. So we are already north of that ADV. Will we hit 1 million today? It didn't seem like it, but now with this next leg down, maybe that'll start to drive in a next leg of paper. We shall see. Let's go on out to the top 10 size positions out here, listeners. What are the big size open positions in VIX options right now? Let's find out together. And you know what? If you're looking for puts, listeners, you came to the wrong place. There are no puts to be found anywhere in the top 10. 10 calls, no puts. Read into that what you will, listeners. By the way, also looking pretty beefy from an OI perspective. It cost you 165,000 contracts to break into the top 10. That is nothing to sneeze at in VIX land. That gets you to the Feb 25 calls. Number 9, 167,000 of the March 40s. Number 8, here we go, 167,000 as well of the March 80s. Number 7, $177 of the March 30s. Number 6, $179 of the Feb 70s. So a lot of fun upside to play with here, listeners. Number 5, 188,000 of the Feb 80s. Number 4, now we come back to earth here, 209,000 of the March 26 calls. Number 3, 213,000 of the Feb 24s. Number 2, 216,000 of the Feb 30s. And then number 1, you knew it couldn't be a reasonable call, listeners. Number 1 out there, also 216,000 as well. 100 contracts difference between 2 and 1. That's interesting. It's the March 75. So right back at it, listeners. In terms of today, what is lighting up the tape out there today, listeners? Like we said, a fair amount of paper on the tape. The big dog today, 68,000 of the Feb 24 calls. Number 2, 55,000 of the Feb 25s. Number 3, 26,000 of the Feb 40s. Number 4, 22,000 of the SEP 25s out to SEP, and 22,000 as well, the SEP 30s. Looks like we got a SEP vertical going on, listeners. The SEP 25-30 vertical going up about 22,000 times. Yesterday was obviously the big dog of the week. It was 1.28 million contracts in VIX land. That's an impressive number. I know we had the flow master on us with Option Block yesterday. He was convinced yesterday was going to be a record number for the industry across the board. I haven't gone back and crunched the numbers to see if he was right, but it seemed like we were pretty much on track for that. And VIX certainly putting up some pretty impressive numbers. The big dog yesterday, 166,000 of the March 26 calls, followed by 134,000 for number 2 of the March 24s. Then number 3 falls off a little bit, only 44,000, but it's the March 75s. Right back at it, listeners. Number 4, 43,000 of the Feb 20s, and rounding out the top 5 on a fairly active Thursday, 35,000 of the July 24s. Interesting. July 24th. So I can maybe get behind those. 561,000 was the volume on Wednesday. The big dog, such as it was, 45,000 of the Feb 70s. Number 2, 36,000 of the Feb 20s. Number 3, 29,000 of the Feb 17 puts. Finally starting to see some puts in there, listeners. Number 4, 25,000 of the April 50s. And rounding out the top 5 on Wednesday, 19,000 of the March 25s. Tuesday, also fairly active. Again, everyone was waiting for the Fed announcement. They're putting up some numbers nonetheless. 594,000 contracts on the tape for Tuesday. The big dog on Tuesday, 39,000 of the Feb 30s, followed by 35,000 for number 2 of the June 30s. Number 3, 35,000 of the June 40s. Number 4, 30,000 as well of the March 35s. And rounding out the top 5 on a fairly active Tuesday, you knew we wouldn't be done without some crazy upside. In this case, it was 26,000 of the March 80s, listeners. They never miss an opportunity to reposition to the upside. Monday, the light day of the week, only 300,000 contracts on the tape. The big dog, such as it was, 19,000 of the Feb 20 puts, followed by 16,000 for number 2 of the Feb 24 calls. Number 3, 15,000 of the Feb 16 puts. Number 4, 14,000 of the Feb 40s. And rounding out the top 5 on a pretty anemic Monday, 11,000 of the Feb 20 calls. These were the weeklies expiring on the 1st. Mr. Meatball, we had a lot of interesting paper, a lot of interesting vol action out there this week. What was catching your eye out there in VIX options this week, sir?
Yeah, there was a huge trade that went up yesterday. where a trader as a package, I think, bought the 24 and the 26 calls, over 100,000 of both of them. Kind of an interesting play with the VIX at the time in the 18s, but it was a pretty bold trade. It's interesting that the vol continues to be relatively low with where we are, but we're definitely starting to see a little uptick in volatility options trading.
One would hope so on a week like we had this week out there. Scott, I know you're not talking to me. You're not looking at all things VOLQ. You've been known to tweet about an interesting VIX trade or two out there, including a lot of the fun upside we've been seeing out there of late. Anything catch your eye out there in VIX options this week, sir?
Yeah, that's an interesting question. The fact that nobody thinks that we're going to head lower, or that nobody shows any interest in puts, is a little bit surprising. I mean, there are some interesting put structures you can put in place.
There are.
To take advantage of whatever your point of view is. And everybody who just steps up and buys the 75 strike calls or the 100 strike calls, I mean, I think you'd be better off buying lottery tickets. I mean, that's essentially what those are. And if you're really looking to help your portfolio, then look at some of the put strategies, even if it means selling puts or put spreads.
Yeah, there have been a lot of those lottery tickets going up over the course of the past year. It is fascinating to watch the ebbs and flows and the trends in the institutional vol space. And clearly over the last year, the trend was to all the upside all the time, whether it was ratios or other ways to buy it. But they were just loading up on all that quote-unquote nonsense up there to fascinating effect. I think also maybe some unintended consequences from that as well, in terms of maybe people looking at, maybe that's what they were expecting. Maybe their expectations were that high. Maybe that's another reason why they thought VIX was muted last year. A lot of different ways we can go with that. Let's keep on rolling out there to the land of inverse vol, listeners, because you are starting to come up against it already. We've been chatting about a lot of vol to parse on the show this week. Go figure. We were at about a 1780 in SVIX when we kicked off the show. That's given up a lot of that now, down to about a 1740. So it's pretty much unched on the week. Not a heck of a lot, about a tenth of a point difference. In terms of paper, not a heck of a lot going up out here as well. Only about a couple hundred contracts, even though the ADV is turning in the right directions, up to about 880. The size positions out there in SVIX, still the number one position of 1,000 of the March 25s. That hasn't really changed from last week. Scott, I don't know if you and I have chatted about this since SVIX has returned to the fray, but are you a fan of inverse vol, or are you one of the folks who thinks maybe this product shouldn't have returned?
This is going to be one of those really kind of nuanced arguments that doesn't always work well, but I'm going to try and make it. I am a fan of the market having whatever tools it wants within reason, but the market having the tools it wants within reason. And if the market wants to have a short vol ETF and they understand the risk, then that's great. I would never in a million years use those products, but that doesn't mean people shouldn't have access to them. I know the new SVIX is different than some of those old products that blew up on February 5th, 2018. One final argument. If I can tell you off the top of my head exactly the date of Volmageddon, then that tells you something. That tells you all you need to know.
An infamous day, certainly for the inverse vol crowd. They'll never forget it. Obviously, the number one question everyone asks when you see a product like SVIX, what happens if that happens again? And they say they've got it solved, quote unquote. But at the end of the day, it can only be inverse for so long. So intriguing stuff, but it is functioning today, even though not really doing a heck of a lot of paper. What is starting to move a wee bit, though, is good old UVIX. We were mocking the reverse split of this product on the show last week because it seemed kind of ridiculous to take the product and reverse split it from 4 back to about 20, because guess what? They were already back into the high teens last week, and it seemed like they were just poised to keep reverse splitting this thing every couple of months if that's what they were going to do, rather than giving it a nice, healthy reverse split up to, let's say, a 40 or something. But you know what? The market coming in and helping out a little bit this week, helping to reverse split UVIX back up close to that 20 handle again. 19.5 right now, up about 1.3 points on the week. So see, listeners, UVIX can go up. And it always happens right around the time of Friday. So expiration time, that usually can be the moment when UVIX, UVXY, all these products, they're heartbreakers, and they'll be drifting down. Then they get that one pop right before expiration, and it wipes out all of your gains. We've seen it happen so many times. So they mostly go down, but they can go up, obviously. And today reflecting that. Also reflecting some decent paper out there. Nearly 2,000 contracts on the tape already. The ADV is 3,400. That's moving in the wrong direction, down about 800. So it seems like maybe folks are with us on the fact that they were not liking that reverse split. Didn't really do much because the ADV is actually down on a week when it reverse split and there was a Fed and the ADV has come in. So that's probably not a good sign out there for the UVIX folks. Mr. Mark, we didn't have a chance to talk last week, you and I, about this. What are your thoughts on the somewhat anemic reverse split that they ended up doing out there? And the fact that it's starting to do a little bit of paper, but it seems like the ADV reflecting maybe the market not that happy with what's going on out there.
Well, they still need to tighten up their markets is the number one issue. I've been slowly building some positions in that. But yeah, they really need to tighten up the markets to make that thing more liquid. They should put some pressure on the market makers to tighten things up a little bit, because now because like I said, they're just too wide right now.
Always kills the liquidity out there as well. Let's keep on rolling to a thing that's a little bit more liquid. This is UVXY. Everyone's waiting for this one to follow suit and do its own reverse split. Hopefully we'll get something a little bit more robust. Let's say up to, I don't know, at least a 40 handle or so. This reverse splitting to 20, that's for the birds. It's at about a 510 right now, up about a third of a point. So getting a little bit of juice back, but not much. Decent paper on the tape today, all things considered, 146,000. The ADV is actually moving in the right direction, 197,000. It's up 6,000 from this time last week. So it seems like things are trading out there. Let's do a quick top three because we're coming up against it out there in UVXY. Number 3, we've got the Feb 6s. Number 2, we have the Feb expiring today. So the third, 20,000 of the 6 calls going out today. And the number 1 size position out there in UVXY right now, nearly 25,000 of the 5 calls also expiring today. And again, this gets back to the heartbreaking nature of this product because we are right at that strike. I mean, we're below it this morning. So a nice rally through it. Maybe some of those folks are owning those calls, in which case they'll be happy. But again, this one's dancing right on the head of the needle yet again. These products. Such heartbreakers. And again, there's so much expiry going out today. In a few minutes, there could be a lot of smiles or a lot of sad faces out here in this name. Let's keep on rolling really quickly, so we got to get to the crystal ball too. Everyone's favorite, or I should say really former favorite of vol product out there that's maybe a lot of you like to follow these days, maybe not so much. It's VXX, about 11.5 right now, up about 0.4 of a point. In terms of numbers, put up a little bit of paper today, 51,000 contracts on the tape today. That looks good when you consider the ADV is only 63,000, and that's up 4,000 from this time last week. So starting to trend in the right direction. Again, we've said it before on the show. You'll be forgiven if you've kind of washed your hands of this thing, given all the Barclays debacle that happened last year. Let's look really quickly at the size positions out there. Let's do a top 3 out here really quickly as well. 12, almost 13,000 of the March 17. So it's all March. Interesting. Number 2, 16,000 of the March 25s. And number 1, about 18,000 of the March 20s. So don't see a lot of Feb in the top 5, which is kind of surprising here for a vol product. Speaking of vol, really quickly, we talked about at the top of the show, obviously. Single names, very much a part of the vol conversation again, because it is mega cap earnings season right now. Listen to some of the names we had popping off this week. Monday, SoFi, Philips, and Whirlpool. That's probably the lightest day of the week. Tuesday, Exxon, UPS, Pfizer, GM, Caterpillar, McDonald's, Spotify, AMD, Snap, EA, and Match. Wednesday, Waste Management, Peloton, and Meta. Peloton even managed to rally this week. Thursday, Merck, Lilly, Honeywell, Hershey, Harley-Davidson, ConocoPhillips, Sony, Amazon, Apple, Alphabet, Ford, Qualcomm, Starbucks, Gilead, and WWE. I take a breath after all that, listeners. And today we have some name you may have heard of called SIBO. So hot name across the board. Hot names, I should say. Big announcements. Like we said, most of them kind of screwing the pooch, all taking different ways around to kind of conceal that fact. Meta just buying back all their stock. You can maybe argue the wisdom of doing that when the stock has doubled. You could have bought twice as much stock not too long ago for your $40 billion. But in terms of obfuscating what's going on at the company, it worked pretty well. The stock shot up like a rocket there. Alphabet also looking light. Apple obviously looking light. And then Amazon having their worst holiday quarter in nearly a decade. A lot of those stocks managing to scrape by. Let's see how our old friend Apple is doing right now. It'd help if I type in the right symbol. That would probably. There we go. As fun as Advanced Auto Parts is. And there we go. Yeah, it's still up. And they keep rallying it more. So apparently the Emperor has tons of clothes out there in Apple. Listen, and if you're an Apple fan, hey, go for it. More power to you. It's rallying hard. I'm glad you're having a good time out there. If you want to see the numbers for all these names you just talked about, listeners, how much they were pricing in from a vol perspective, what they've delivered in the past, what they delivered now. We have the earnings move results, earnings season, and earnings trades report. Let's check out the season report really quickly before we roll on here to the crystal ball. Right now, listeners, we're hanging out at, get this, 133%. Spoiler alert, we're not going to settle out there. That's ridiculous. We've never seen a cycle that robust. Right now, our average since the pandemic, a little bit before, is about 92%. So 133% would certainly be a ridiculous outperformance. Most of that's coming right now from week 3 with 158% outperformance. Again, 100% listeners being if every name moved exactly as much as how much was priced into their straddle. We are moving roughly a third more than that right now. So that's a heck of a lot of juice. Will we stay there? Probably not. But it's fun to watch. You want to see that report for yourselves, as well as, of course, the earnings trades where we entered a ton of calendars and straddles for you folks this week. So check out all those. Amazon and Starbucks were in there as well. So if you want to check out what names are putting on, which ones are taking off, as well as how the season is reporting, as well as how the individual names are stacking up, theoptionsinsider.com is the place to go. Click on the Options News and Articles tab, and it's all there for you for free because we like you. As we keep on rolling right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball, the most difficult, the most dangerous portion of the show where we attempt to wrestle with the vol gods and see what they have in store. But really quickly, before we do that, Scott, I want to get your thoughts on our question of the week. It just expired a couple of days ago here this week. It was partly inspired by your conversation with our pro listeners in the hot seat a couple of weeks ago, because you were expressing a sentiment that maybe a lot of this zero DTE action out there was leaning towards the gambling side. And of course, I went to Stack last week. There was a lot of debate about whether these products were good or bad at the end of the day. So we thought we'd put it to our audience this week. We said, hey, this zero DTE trend is all the rage, subject of a lot of debate at STA Chicago last week. You guys are clearly trading these products in large numbers, but is this zero DTE explosion, is it a good thing for the options and volatility markets at the end of the day? We gave you 4 choices, 2 yes and 2 no. Yes, this is good because it provides cheap retail SPX access. Or yes, this is good because it's enticing more traders. At the end of the day, more volume is a good thing. Or no, this is just gambling. Or no, they are gamma bombs. Gamma bombs, by the way, TM, coming to a t-shirt store near you. But Scott, our audience went negative. They 35.3% saying no, they're not a good thing because they're just gamma bombs. Followed by right behind it, no, this is just gambling, 29.4%. So you add those two together, roughly 2/3 of our audience is in the negative territory, which kind of surprised me. Yes, it provides cheap retail SPX access, number 3, 26.5%. And then bringing up the rear, yes, it's good because it entices more volume, only 8.8%. Scott, I know you're a little skeptical of these. Are you surprised that our audience, maybe a little bit too?
I'm probably a little surprised that that's the outcome, but I'm proud. You should be proud because I think your listeners are right. One thing really quickly. SPY options are the most liquid options in the world. They trade more volume than any options in the world. They're 1 or 2 cents wide for almost any option you want to trade, and you can trade them either cheaply or free. So why in the world would you need cheap SPX access?
Oh, 26.5% of our audience does, apparently. So they wanted it out there. Intriguing stuff out there, listeners. We got to get to the crystal ball, though. We're coming up against it. All right, let's rack them up here again, listeners. At the end of the week, like we said on the show last week, I should say, it was myself and the Rock Lobster, and we had Mr. Dave Lincoln from the Short Vol Show. I was feeling the most juice, actually, listeners. Dave was at a 17.5. Andrew was fading it at a 17.25. We flirted with some of those earlier this week, and then now I was feeling the most juice. I have a feeling if I delayed the show for like 20 minutes, I would have another bullseye on my hands. Because I was at a 1933. We're looking at about, looks like a 1915. Let's see right now. Let me just pull it up here. Yeah, about a 1915. So if I wait a few minutes, I'll probably be right. But alas, it's not how the show works, listeners. So I am 0.18 away. Wow. I am just outside our margin of victory of 0.1, listeners. Close. I'll make myself as a close bullseye, but no bullseye for me this week. We had other listeners really quickly. Looks like our producers putting in here the closest ones. It's like the closest might have been Pariah Pants at 1903, about a third of a point away for you. So congratulations. No victory for you as well. You're in the same boat as me. We're both kind of equidistant away from the number here. Then the rest of you, 18, 19, some 20 handles. But that looks like that was the closest. Our producers will go through, make sure all you listeners who submitted guests are validated to make sure there are no missing winners out there. Oh, and VOLQ right now, 23 and about 3/4 as well. So let's go around the horn. Scott, you are our guest, so we'll let you go first, sir. You can pick whatever you want, VIX or VOLQ. I'm guessing I know which way you want to go. And what are you feeling for this time next week?
I'll go with VOLQ, and I think it's going to be at 25. So I think we'll get a bit of a rally in volatility.
25 even for VOLQ. All right. I can say we're at about 23 3/4 right now, listeners. Mr. Meatball, I'm going to go last because I was the closest this week, so I get to bring up the rare this week. What are you feeling this week for VIX or VOLQ or both? Whatever you feel like.
Sure, I'll do both. I kind of like where Scott's mindset is. I'm gonna say, let's go crazy. All right, we're gonna do 26.62 for VOLQ, and for VIX we're gonna do 21.12.
You do love your 21.12 level out there. So VIX 21.12, VOLQ 26.62. I need to start expanding my frame of reference so I can start getting those bullseyes out there in VOLQ as well. I was so close. I should give myself half a point this week. Doesn't quite work that way, listeners. But see, even we can miss by a little more than a tenth of a point out here, listeners. All right, I was feeling a little bit more vol last week. It came pretty much right to fruition here. I also am feeling a little bit more vol here this week. Obviously, Mr. Meatball going above me here at 21.12. That high, that's a tough one. I don't know. I'm gonna say we're gonna be more. I'm gonna say we're at north of a 20 handle this time next week. I'm gonna say 20.65 in VIX, and then for VOLQ, that's a good question. VOLQ, I'm going to say we got a lot of upside going here for VOLQ. We're at a 23 3/4. I obviously like more as well. I hate to. Roughly a couple of points more is what I was feeling. I hate to split the uprights here between Scott and Mr. Meatball. So tell you what, I will be the outlier here on VOLQ. I will say a 27.15. All right, there's your markets there, listeners, for this week. I'm at a 20.65 in VIX, 27.15 in VOLQ. Mr. Meatball, 21.12 in VIX, and VOLQ 26.62. And Scott going straight VOLQ at an even 25. All right, listeners, that is going to do it for the Volatility Views program. Packed a lot of living on the vol front this week. But before we go, Mr. Scott, if folks want to learn more about all things VOLQ, sir, where should they go? What should they do?
They can go to NASDAQ.com/VOLQ, or they can check us out at nations.com, and they can learn a little bit more about all of our indexes, or they can follow me on Twitter at ScottNations.
Make sure you're giving him a follow on Twitter if you haven't done so already. Always tweeting out fun charts and everything else and making fun of some VIX par calls and everything else over there at Scott Nations, all one word over there on Twitter. And Mr. Meatball, same question for you. If folks want to reach out to you to discuss the order of the day in the world of volatility, where should they go? What should they do?
Yeah, go to options.com. I'm writing a blog about VIX and volatility. Every VIX, volatility, SPX, NASDAQ, you name it. If it's got volatility, I'm going to be writing about it. Options.com, and then the blog is called The VIX Edge.
There you go, The VIX Edge. We're checking with our pro listeners here. It looks like we got a lot of 20 handles and 21s here in our chat for folks who are playing along with the crystal ball. We'll get all your predictions. Make sure you get them in soon so our producers can collate them all and get them all together here with the end of the show. Because, hey, at the end of the day, you can win some fabulous prizes if you're within our margin of victory. For all of our on-demand folks, that is going to do it for your broadcast week this week. Thanks for joining us on a very topsy-turvy, tumultuous week. For all you pro folks, hang out there. We'll be back in a little bit to break down this mad week from an unusual activity perspective. Spoiler alert, there was a lot of it. So we have a lot to pack in there for options oddities. If you're not on the pro side, head on over to theoptionsinsider.com/pro. You got a little time to make it in there before options oddities. And of course, we're back again next week all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.